Well, it's time to introduce our next guest, Mike Kosmowski, Ben Bremer, and Noel McDonald of Lender Consulting Services. Welcome, LCS team. I'll turn the mic over to you all.
Welcome, welcome. So I guess good morning or good afternoon, depending where you are. My name is Mike Kosmowski. I'm the Senior Vice President here of Construction at Lender Consulting Services. LCS is a third-party due diligence consultant headquartered in Buffalo, New York. And we've been operating for almost, 30 years now with nationwide outreach. My colleagues and I are excited to give you an overview of the services provided by the three departments of our company, construction, valuation, and environmental services. We'll do our best to kind of keep this high level and give you an overview. And if you have any questions or need more details, you can either ask during the Q&A or reach out to Liz Mahoney, our Senior Vice President of Business Development, whose contact information will be on the last slide. I understand they're recording this and sharing it, so you'll be able to get a hold of Liz after that. So I guess let's talk construction, everybody's favorite topic. Sorry, Liz, or sorry, Noel, sorry, Ben. At the end of the day, the mission of the construction department here at LCS is to provide services, that'll help lenders in all areas to mitigate risk associated with construction deals. Those deals could be anything from a property acquisition to a construction loan, or unfortunately, and we see it more and more even after COVID, projects that might be entering special assets. We like to use our high-level industry knowledge to guide you forward in any way you need. So, our services at LCS construction typically fall into three buckets. Construction loan reviews or monitoring, property condition inspections, and construction consulting services. As it relates to construction loan reviews, we provide a robust plan and specification cost review. These reviews provide a comprehensive, I would say, deep dive into project particulars such as drawings, permits, contractor contracts, environmental reports, geotech reports, budgets, etc. And we'll provide you with a risk summary at the end of the report so you can determine the viability and/or health or stability of a project. And you can see, we do database comparison, we do risk identification, and then we'll even give you strategies to mitigate some of those risks that have been identified. Now, normally in conjunction with a PSCR, we'll provide periodic draw monitoring services. And an LCS draw inspection will perform an on-site field inspection, reviewing percentage completion of a project as it correlates to budget line items to assist in verifying proper project payouts for work complete. We'll also review change orders, schedules, lien waivers, potential change orders, or any other pertinent documents to make sure that the project is progressing on time and on budget. Now, as it pertains to property condition assessments, LCS kind of has a three-tier PCA reporting system, basically a good, better, best system based on what's needed for the transaction. So we start with what I would say is our granddaddy, the property condition assessment. It's an ASTM 2018-24 report. This includes a field assessment of 22 systems of the building. And after review of that assessment, we'll provide you with a reserve schedule that does a 12-year look ahead, not only for what needs to be repaired, replaced, or maintained, but also the cost of those. So you'll be able to put some reserve holdings in, into your program. We also do what I would say the good and the better is a PIR in LCS lingo, a property inspection report. Very similar to the PCA, except instead of 22 systems, we only look at 8. This tends to be for a more lower level deal, or maybe a deal where the building's a little newer. But we'll look at those 8 systems, do the same thing, come up with condition issues, now only over a 5-year reserve. So anything that needs repair, replacement, or refurbishment over the next 3 to 5 years. And then the PIR Plus will actually give you the costing on that. So, a little lower level or a little lighter report, but still lots of great information. Now, if you have reports that you receive from other due diligence vendors, but would like a second opinion, we do often peer review reports from other vendors. So they could be anything from a PSCR to a draw inspection to a property condition report. So please feel free to reach out. We can kind of tailor that to your needs. Now, the construction department here, and I think a little different from some other due diligence vendors in the space, we do provide owners rep services. Quite frequently, project owners take on the responsibility of managing their day-to-day companies along with a construction project for their company. That can to alleviate a lot of pressure from the owner. LCS often acts as an owner's rep to coordinate all the stakeholders on a project, i.e. architect, contractor, municipality, lender, et cetera, to make sure that projects get finished on time and on schedule. I always say, almost like a traffic cop, right? We're there to help the owner navigate through their construction project with the least amount of pain and the most amount of efficiency. We also, as needed, due to our robust bench of PMs, estimators, and superintendents that work at LCS, we can provide true open book construction management services anywhere in the country. So, it's something that we are very selective on, based off of, borrower, client, lender, and project. But, we've seen great success in assisting, borrowers get through construction projects that, maybe they don't have a contractor and they don't feel comfortable in sourcing one, or, they have people that have been provided to them that they also don't feel comfortable about. We can come in and provide what we call a full open book. So you'll get to see we source the architect, we source the subcontractors, we generate the budget, the final budget, we track the budget, we track the change orders, we generate the contracts, we sign the contracts. So, basically it's a one-stop shop. The benefit is that the borrower gets to see all the bids, all the bid requests, all the numbers, and they're involved in that project from start to finish. Now, based off of your internal staffing needs, this is something that LCS has been doing with great success. And, we like to offer it up to any of our clients. We offer a construction outsource management program. So, based off of, maybe you're starting to do more construction lending and don't have the loan admin staff to handle it, LCS can come in and assist you, with vendor selection, vendor sourcing, vendor approval, bidding projects out to those vendors, and then reviewing, peer reviewing those reports and invoicing those vendors for you, kind of acting as your loan admin on the project. And basically, as I've already talked too much, there's resources that we can provide you to help anyone in this space. So please feel free to reach out. I would always say one good thing about LCS is if it's not a service we provide today, especially construction, valuation, and appraisal, we can usually help, find something or make something that fits your needs. So, Noel.
Thanks, Mikey. I appreciate that. Good job. Well, hi, everybody. I'm Noel McDonald, the SVP of the Valuation Services Department of LCS. And just to piggyback off of what Mike said, we're a nationwide company with more of a small field. So, as he said, if there's something that our clients are needing or want to address, we usually can come up with a solution quicker and faster than some of our national competitors that have to go through many channels. We talk a lot to each other and solve problems with each other, with the other departments. So it's very cohesive, and we want to get you that solution. The main thrust of our business is that we're third party. And in that, we're third party that's unbiased, and we give it to you straight. We give it to you how you need it straight up. I know I've worked in situations, even at banks, where a lot of the times you're sitting in a meeting and you're kind of pressured as an appraiser to make a certain call, or the valuation department, they're looking at more than just the collateral, they're looking at the credit. You want to take that out of the equation. So that's really what we like to offer, is that third party unbiased opinion, and really give you a good idea of what the risk is, and give you good due diligence that you can use and kind of stand on firmly. So next slide. Our biggest caveat, and I think this slide is a little reverse, is we protect risk. And that's the main thing for me, is how risky is that? Not that we step away from risky ideas, but we mitigate those risks. How can we mitigate those risks? And that's when you bring the experts in. A lot of times you have people sitting within your institutions that just want to see the deal done. There's a lot of pressure from borrowers to get things done, but what is the risk? Have we outlined that risk? And then a lot of times we can save you some money on the front end by putting certain issues in place or bringing them to the forefront so they can be underwritten properly. So those are our big kind of things that we do within the valuation services department. Next slide. Again, we're nationwide. We have seasoned professionals. Although I might look young, I am actually been in the business for several decades or a couple decades now, starting out as writing appraisals. I've worked in the bank as a reviewer. I've been a reviewer for a third party firm like LCS. And then I also spent some time working for the government as an underwriter. So I've been all the way around the kind of value of the property. And we all know the basis of any real estate decision is how much is that thing worth? And if you're able to nail that down, the rest should be easy. So that's kind of where we're trusted for our opinions. We give it to you straight up, and we're really that third party partner with our clients, which seems to kind of be the thrust of our business. Next slide. Again, getting into how we customize things. I've had clients say, we don't want you to do the eval for us. We want you to suggest some sales for us. And what does that look like? And we know we can do the eval internally, but we really want you to vet the sales. We came up with a new product to do just that. We need the information. We need the data. I'm a data cruncher, so I like to have good data. That's something that we pride ourselves in. We really want to get down to the true value, want to tailor a solution. We have a full range of products that can do that for you, all within the guidelines. The use path is the appraiser's Bible, and I've been following that for a long time. We've got interagency guidelines, we got federal guidelines, which things are changing, and that's excited to see in this new world. But that's kind of where we're driven from, everything within those guardrails. Next slide. Again, federal compliance, quality control. That is what we do. As an appraiser, I understand what an appraisal should look like as an appraiser. So that if I can identify when an appraiser has stepped across that line. Certain, if you haven't had appraisal training, you might not know that. Or if you can look over those things if you're not careful. So that is what we really want to shoulder up and give a good foundation to our clients. It's all about quality control, making sure we have the best reports on file, the best values on file, and we can stand on those values. Next slide. So again, we offer a full range of appraisal services, starting with full commercial appraisals on commercial property. We do evaluations. The crux of our business has been appraisal reviews, and we also do validation reports, which is something that a lot of our clients have been looking into doing within this market. And it's good for certain things and bad for others, but we handle all different size loans, small balance up to your large scale developments that might be working with a client, that's working on a construction project, and we might be pulled in to do some of the work on the valuation end. So we can kind of tailor our solutions to work across all divisions of the company as well. Next slide. This is just a little bit more about our commercial appraisal report. It's a hybrid report where we send out qualified inspectors. Also, some are within our footprint, depending on where you are. We do the inspections ourselves, and we write the reports from our desk. They're quicker, they're faster, and the turnaround times are very, that's what our clients like. The quicker the better, but more access to data. You're not spending that time in the field and trudging along in the snow trying to tape a building and see what's going on with the property. So that's one of the reports that we offer. Next slide. Again, the appraisal reviews, that can be an administrative or full technical review where it gets in more into the reasonableness, not just is the math right, but does the appraisal methodology make sense? Did we capture all of the extraordinary assumptions and hypothetical conditions? Is it compliant with USPAP? All of those things, any deficiencies that you like to point out, that is what we capture in our reviews. So very robust review system. We also have an MAI on staff that will review your reports for a little bit of a premium, but give you just more of a substantial review if that's what you're looking for. Next slide. Our validation reports are big again, like I mentioned in this time. Basically, we check and see if that last appraisal that you had might be 3 years old, might be a year old. Has that value declined in the current market? If it hasn't, you get an up-to-date validation report that says that value is still good in today's market. That takes away the full appraisal price that you might have to buy or pay to get a new updated appraisal, and it gives you something actionable to use in your current transaction within the guidelines, federal guidelines. So good to have, good to use right now. Next slide. And our evaluation services are just as robust. We have trainees that are appraisers that are doing these. We have options available where it can be signed and done by an appraiser. It can include an income approach to the sales approach for your eval. This is for your low balance loans, for your refis. You don't want to order a new appraisal. This is a smaller, quicker, dirty, less expensive option. Next slide. Again, we've also offered outside of those services, we've done feasibility studies. We've helped our clients decide where to put their new self-storage facility. We've done a lot of financial analysis on large office buildings, going through Argus models and just replicating what the leases look like. So there's a full range of services that we can offer outside of our typical reports that we're happy to do that for you as well. Next slide. And our last is kind of our property information report, kind of like the PIR report, property report that Mike was describing. You know, we get photographs of the property, the neighborhood, kind of your eyes on the property. A lot of times, if there's been a disaster, we're employed, you know, maybe there's been a tornado or some storms, we've been employed to do these kinds of reports, quick and dirty, but give you a synopsis of what's still there, what's actually there for your just in your internal records. Next slide. And this is just why you should choose us. We've been around a long time, and we've got a good coverage across the 50 states, and we're 100% compliance. That's my main thing. Again, I told you I work for the government. It's a little bit different, looking at from that veil. So that's all important to us as we're looking to offer those services to you. Next slide. This slide is a little bit more about some of our resources. You can check out our podcasts. We've done blogs, and these are links to a couple of those. You can find those on our website. And then, you can also reach out to me directly. But those are a couple examples that you can find, and you'll get these slides at the end. And last slide. Thanks, Mike. One more. That's it. Thank you. I'll pass it over to Ben.
All right. Well, thank you very much, Noelle. Appreciate the opportunity to speak today. My name is Ben Bremer. I am the president here at LCS, and I'm going to be focusing in on our environmental services. So why don't we jump right into it, Mike? All right. So comprehensive environmental due diligence solutions. Most credit unions out there these days have moved towards kind of a tiered approach to environmental due diligence. And LCS was actually one of the pioneers in that area way back when we got started 25 plus years ago. So kind of in general terms, and I'll emphasize this, all of our services can be tailored to the individual needs of our clients. But in very general terms, we offer what's commonly called desktop environmental reports. We offer transaction screens, which we follow an ASTM, an American Standard of Testing Materials standard on that. And then the same goes for what is most commonly known in the industry, which is kind of the Cadillac of environmental due diligence services, which is a phase one. We're going to talk about our phase two services and what that exactly means, as well as when certain properties get to the remediation phase of environmental due diligence and compliance. So next slide. All right. So in general, these two reports here that you see on the slide are what we call our desktop services. So our EA Quick, that's Environmental Assessment Quick Opinion Report in very general terms. Basically what we do on that level of report is we will purchase environmental data, which is essentially federal, state, and sometimes local government records, which is put into a very readable format. So one of our environmental professionals will review all of that information and then provide recommendations and a high or a low risk rating on that. So it's a very basic, meant for simple property use types, quick screening of the property purely from a regulatory perspective. So the next level up from that, we call that our EA Quick Loan Check Report. This is also commonly called for the SBA world as a record search with risk assessment. So that's another one of the names you'll see out there in our world. So take the same exact level or the same exact records that we're reviewing on the opinion report, and essentially what you're doing is you're snapping on some historical research to it. So usually that historical research will include historical mapping of the property, which will include buildings, occupants, gas tanks, all sorts of good stuff. The detail on what is called a fire insurance map is extremely detailed and helpful for us. Then it's also commonly going to include city directories. So basically what you're doing there, taking the address of the property and where directories exist, is you reference that address back through time and see who may have occupied the property to see if there's any environmental risk there. Then we'll also look at some online municipal research where it's available as well. So one of our environmental professionals takes all of that information that I just described, and then we'll again summarize it, make recommendations, and have a risk rating on that. All right, next slide. So the next level up from that. So take everything I just said as part of that EA Quick Loan Check Report. And the main difference here is you're going to get a site inspection. So one of our environmental folks will go out to the property. They'll do a thorough inspection on site, as well as going through a questionnaire with the owner or operator of the property to get some details on that. And then we'll do a little bit more thorough research in the background on that, but that's it in a nutshell for what a transaction screen report is. So it's kind of a, for lack of better words, a watered down phase one, which I'm going to cover on the next slide. All right, so a phase one environmental site assessment. This is what most folks are familiar with when it comes to environmental due diligence. It really takes everything as part of the transaction screen, but you're getting a whole lot more detail on it. You're getting a lot more detail on what types of soils are on the property, what kind of subsurface there is there, a little bit more detailed background on it, more questionnaires to keep it simple. That is really everything that a phase one includes, and that is an ASTM standard report, which is also backed by the federal government under CERCLA as well. So in this report, you're going to get a whole bunch of what can be sometimes confusing definitions as far as what's a recognized environmental condition and the various tiers of a REC that exist. But the thing I'll stress on this is always lean on your consultant to help you navigate what all those things really mean from a lender's perspective. That's where you really need to challenge your consultants out there, and that is the area that LCS specializes. It's really taking all of the information on all the reports that I just described, and rather than giving you a whole bunch of confusing definitions and terminology, we really like to boil that down to a simple risk assessment that helps you to navigate whether or not you want to place a mortgage on a piece of property or not. Go ahead, Mike. All right, so a phase two, just to go super high level on this, a phase two is basically once you're out there and actually collecting soil and or groundwater samples to see if there's any contamination in the subsurface. So if a phase one or any one of the previous levels of report identified some risk, and you really need to understand if the risk exists or to quantify the risk in any way, shape, or form, that's when you would move to a phase two level of a report. And then turnkey remediation, that's when you've identified that there is contamination on the property and you want to remediate that. So that's a situation just using an easy one. Gas stations, you go out there, you test the soil and the groundwater, you find petroleum there. There's all sorts of ways that you can remediate that issue and be in compliance with whatever the state or federal guidelines are there. Go ahead, Mike. All right. So similarly to some of the services that Mike and Noel had discussed, we will do reviews of phase ones or other environmental reports. So if you or your borrower have previous environmental reports in your file, feel free to send those over to us. We can review those and boil it down to simplicity. We can help you with quality control and most importantly, report updates. This is a big thing out there. So in the credit union world, everybody kind of follows the NCUA's environmental guidance. And what happens in that space is basically what the NCUA says is do the appropriate level of environmental due diligence based on the risk of the property. Is that boiling a whole lot of words down to that? But there's a common misconception out there that if you have an old environmental report that's, let's say, 4 or 5 years old, that it's no good anymore. Well, pieces of it might be. But there's ways to update those reports without recreating the wheel, which will save in turn to your borrower's fees. So always challenge us on that front. The best thing to do on that to simplify it is to, if you have a previous environmental report in your file or your borrower has one, send that over to us. We'll take a look at it. We'll understand the property. We'll understand the situation and advise on the simplest form to move forward, keeping fees down. Next slide. So risk support program. I'm not going to go through each one of these, but the best way for me to describe this to everybody is we specialize in providing outsourced solutions, which Mike and Noel had referenced. So what does that mean? So just think of what all of the big lending institutions in the country have on their staff. They have an environmental team that helps with policy development, vendor management, training, peer review services, sometimes bidding on projects, all these types of more admin related services. So we can provide those as an outsourced program to credit unions out there these days. So that is one area that we specialize in. We have several of these programs in place. No two are alike. We always like to interview our potential clients on that front, understand what their needs are, and tailor a program specific to their needs. Next slide. So package services. So to keep this very simple as well, what we like to do here is we like to be a one-stop shop. So you can order a service from our environmental, our construction, or our valuation services department. And there's ways to create efficiencies in that process, especially when there is a site inspection involved. There's the ways for us to allow for efficiencies there, which then we can package these services and keep costs down again for your borrowers. All right. So similarly on the other topics we discussed, you can jump to our webpage here. You'll see all of these articles and insights. There's a whole bunch of good information available on our website, and the links are here that talk about all things environmental and due diligence and compliance out there. And yeah, that's what I got for the slide. And I think that is it as we open it up for some questions.
Yeah, if you have some questions, go ahead and feel free to unmute yourself and ask those questions. Throw them up there in the chat. We already have a few questions, so I'm going to ask a few, and whoever is the best one to answer it can just jump in. But certainly, if you have a question out there, one of the attendees just kind of jump in and tell me to stop talking. So, but one thing, these are not in any particular order, but one thing that a credit union asked about is, you mentioned like those desktop environmental reviews. Like when is it appropriate to do that versus the phase one? Is it historically, this credit union said they usually used loan amount, but they're rethinking that because kind of what you said about risk of the property. So any comments on when that makes sense or what that process looks like? Should you get the database report first and then get the phase one, or just I'll let you answer now.
It's a great question. So What most credit unions do is what they'll use is a version of the Small Business Administration's environmental policy, kind of take that, review it, make it a little less rigid, and use that as their own policy, so to speak. So what that SBA policy tells you to do is they have an organized list of property use types that are organized by NAICS codes. And essentially, usually the way the process starts is you look at that list, and if your property use type, whether it's current or historical, they'll take a look to see if the use type is there. And if it is on that list, you're going to want to do a higher form of environmental due diligence report right off the bat. If your property, let's just use an easy one. If it's an apartment building, relatively new build, nothing was on the property before. Okay, well, then you could do a desktop environmental study for that, which should be more than appropriate. And then if that desktop study does, for whatever reason, identify risk, then you can move up to the next level of reports, which from LCS, you would get a progressive price approach on that.
Okay.
But so really what you want to do is focus on property use type first. Loan amount is always secondary. Most credit unions, their policy will have a hybrid version of that where you're looking at the use type first. Loan amount is also a consideration as well. But the key is when using desktop reports is you want simple property use types, no factories, no gas stations, no dry cleaners, no things like that. It's just not an appropriate level of report.
Okay, and then a couple other questions about that. Then I have some, I think, for Noel on the list. But you mentioned the combo, or actually, let's go back to this question. The transaction screen. You mentioned on a transaction screen, you guys actually send a person out there to look at it on that.
That's correct.
Is that normal for most? Because this credit union just said, "Hey, we get transaction screens," and I don't think they send a person out there. Is that different for you all, or is that something they?
Yeah. So that's actually a really good question.
Yeah.
You hear transaction screen in the market, and it means a lot of different things. If you're strictly following the ASTM standard for a transaction screen, you are supposed to have a site inspection component to that. There are companies out there that kind of use that terminology because it's commonly known and it's used as a desktop study, but technically according to the standards, so any approved vendor that's doing work for any of your credit unions, it absolutely should include a site inspection.
Okay, great. No, that's good. And then one last thing on that, somebody asked about those combo reports, and a couple things I want to ask a follow up to that. But you mentioned small balance loans. Like, what in your experience is a small balance loan? Is there a number that you could kind of help with?
Yeah, I mean that one
That's
varies a
different for
lot.
everybody. But
I would say the normal range is anything less than, I would say, like 1 to 3 million. I know that's
okay.
a big range. Most will say 1 million and less, but there are many lending institutions out there that will kind of use 3 million and less on that front.
And with that, they could just kind of combo a lot of these services you talked about. So instead of having a vendor for, getting phase one from somebody, getting that plan review or whatever from somebody, and you guys can just kind of price that all together and kind of deliver it. Is that correct?
That is correct. And in addition to a fee savings, it's also a benefit to your borrowers or whoever the site contact is that we're meeting with. So rather than having 2 or 3 different site inspections, you get them all in one shot.
Yeah, I get that. And then a question probably on the evaluation side or the valuation side. Someone asked about that. You mentioned during the annual reviews when you did, I'm sorry, the appraisal reviews, that sometimes you have, appraisers do those, or MAI certified appraisers doing those reviews. In your opinion, when should you have an MAI appraiser do the review versus just anybody do the review? And I'll just say quickly, because a lot of credit unions just do these in house. They'll have someone use them who really doesn't have any specific training. They just kind of do the review. But when do you really need an appraiser to do the appraisal?
Well, here's the thing. That's a couple different questions there.
Okay.
All of the LCS appraisal reviewers are certified general appraisers. We're all appraisers. So that's one thing. I think to make it clear, I do understand a lot of our clients that are credit unions only, they will review their own appraisals, but they don't have appraisers doing that, which, that's their cup of tea. But a lot of times they'll say, well, if it's over this loan amount, we're going to send it out to LCS. Or if it is out of their footprint, they'll send it over to LCS. Or if it's a certain dollar value tied to the appraisal itself, if you're spending $10,000 or $5,000 on an appraisal, you might want to have somebody that has that background. So as far as our MAI level reviews, those are, that it's going away a little bit now, I would say, where people feel like they need that. But there's definitely instances where there's multiple properties or there's a portfolio of properties where that is requested. Do you need that for your small mixed use building or your mom and pop restaurant? I wouldn't think so. I have enough experience as a certified general appraiser or my team to handle that type of assignment. But if you're getting into, let's say it's an apartment building and there's low income tax credits, or there's some historical preservation going on, and there's mounds of leases or lease analysis, then you might employ an MAI. But I think it's really depending on the risk, I would say, with the transaction. If you've
But
got a
using at
risky
least a
one.
licensed appraiser would be, or certified appraiser would be a best.
Absolutely, absolutely. You can review an appraisal as a non-appraiser. That's what we call an administrative review technically. But checking the math and if you've seen enough of them, you might be able to pick things apart. But a lot of times, if you say I don't like your cap rate, that doesn't really go far with that appraiser that wrote that report. You need
Right.
to have somebody that can go on and say, hey, I think we need to look at your cap rate. Here's some instances where we think, leasing activity is up in the area. We think that there's a low supply, all of those things that go into what a cap rate is that you learn as an appraiser, the methodology, and you give that back to the original appraiser that wrote it. And you say, well, here's all of these things. Now you kind of corner them into kind of looking at it in a different way. Somebody that speaks the language, if you will.
Right. Yeah. Then one last question on those, and I have a question for Mike too. But the one thing that a couple credits asked this question about those validation reports, I think that piqued a little interest. Do you have financial institutions that maybe use those like during the life of the loan? Like maybe the loan's been out there for 2 or 3 years, they still have it. Maybe they're doing some updated valuations, but maybe along the lines doing that, or maybe just when do they use those validation reports? And I have a follow up, but yeah, go ahead with that.
Yes, it's usually collateral monitoring. It
Oh,
might be a refinance situation. But it's more so when we don't necessarily, we need to check the pulse of the loan, to check the pulse of
yeah.
the collateral, but not necessarily get a full new value. So all it's saying is that the value probably did go up, but it definitely didn't decline. So you might be able to underwrite to those same standards that you did originally and just extend it out. So that saves the time with ordering a full appraisal. It's a fraction of the cost. We
That was
can
a
even
question for
go
you.
out and do the inspection. We can do the inspection, or you can have one of your loan officers do the inspection, send us the photos, and we'll write the validation report for you. Absolutely.
Is that something that financial institutions use ever for like loans that are having trouble or on the watch list or something? We'll go ahead and have
Yeah.
it.
They definitely do. Sometimes
Yeah.
it's a post checker. Just because your property has issues, it might be management. It might not be with the market. It might be poor management. Maybe that leasing officer or that management company isn't actively doing what they need to do to keep the property up, and you really don't have that big of an issue unless you switch out that company. So it gives you an indication of what the market is doing versus, and then put your property in that perspective versus an appraisal where it's the opposite.
Okay, perfect. Yeah. And then a question for Mike about somebody had a question about that kind of construction, kind of in the plan review idea, but the question was about that risk summary.
Mhm.
Does that risk summary, or even a different part of it, does it include like contractor due diligence and things like that, or what?
Yeah.
It's really in there?
Yeah, so in the plan and spec cost review, that's exactly what you'll see. We can do everything from contractor due diligence. Most contractors can provide an AIA 305, which is an American Institute of Architects document, contractor qualification, where we can check references and do background checks and all that type of stuff to basically do that. And again, that'll vary based off of project size. Would you do that for $100,000 build out? Probably not. But would you do it for a larger scale project, big multifamily job or a big warehouse job or something like that? Probably. But yeah, that's the whole point of the plan of spec cost review, is to, give you, go through all the documentation on the project, everything from, we look at architects' contracts. We looked at contractors' contracts. We look at, engineers' contracts. We look at building permits. We look at zoning approvals. We look at schedules and budgets, and because all of those things tie into the end, which is, getting a project done on budget and on schedule, right? So if you don't catch it early, and that, I have, and, some clients, they want to do a plan of spec cost review after they started construction. To me, the horse is out of the barn at that point in time. The major use of this report is before you've closed on the loan, before you're pot committed, you can go back and say, hey, listen, before we close on this loan, I have these 5 risks on the project. Can I, renegotiate the GC contract? We've helped with that. We've identified sometimes, we always like AIA or American Institute of Architects documents to be used on a construction project. Whenever you see proprietary documents from a GC, those proprietary documents always skew towards the GC side. They're very rarely do they help the borrower or the lender, so that's why we go through those to say, hey, listen, these are things that, are not industry standard. These are things that don't work well. This is where you have, your biggest risks. There's no retention on this job. There's no contingency. The schedule says 4 months. It's going to be a 9-month job. They can't get 4 months, they can't do a $4 million job in 4 months. A whole host of things like that. Or, oh, by the way, the budget that they provided was from 2019 or 2022, or, it doesn't have up-to-date costs in it. So yeah, I mean, that's the whole point, is to give that risk summary and then use it. We usually use it with our clients to have a meeting, have a little narrative, meeting after. What do you guys think? They'll come to us and say, okay, which one of these are larger issues than others? Which one are just, hey, I'm just letting you know, and which ones are ones that, they really need to work on to mitigate their risk.
All right. Well, hey, thanks a lot. We really appreciate you guys, Ben and Mike and Noel coming today and talking to our CUBG clients out there.